Hello, this is Group 4, and the current issue topic that we will talk about today is the EV market and its opportunities. This is the table of contents. First, I am Yeran, and I will introduce the EV market. Electric vehicles can be different from the conventional vehicle in that they use the battery for their energy instead of fuel. The electric vehicles can be divided into HEV, PHEV, and BEV, which stands for hybrid, plug-in hybrid, and battery, respectively. The ICE, which is the conventional vehicle, uses fuel as its energy, and the battery is mainly used to crank the engine. The hybrid electric vehicle is a combination of a combustion engine and electric engine, and the battery is mainly used to boost the engine power and energy sufficiency. The plug-in hybrid electric vehicle is also a combination of a combustion engine and electric engine. For this, the battery is mainly used while driving shorter distances, such as the first 25 to 50 kilometers, and after that, the battery is used to boost the engine's power and energy sufficiency. The battery electric vehicle is a full electric vehicle, in which the battery fully supports the vehicle. Currently, the PHEV and BEV is what we know as the electric car. Next, we can see that the EV market is growing through this graph, which shows the passenger rate increase in car sales in China, Europe, and America in the recent 10 years. In this graph, we can clearly see that the EV market share is tremendously growing. The reasons for this growth can be explained in the PEST analysis model of the EV market. First, in the political sector, government regulations related with CO2 emission has been the growth driver. For Europe, the CO2 emission regulations based on the 2015 Paris Agreement has been strengthened in 2020. In order to dodge the penalty, car-producing OEM companies has to increase low carbon car sales by 20% per year. As for America, under the Biden government, environmental policies will be implemented very aggressively. China has also recently declared their new energy vehicle industry development plan for the next 15 years, which will increase the sales of EV in the market. The economic factor is EV price reduction. In order to increase market share in the competitive status, companies will reduce the price of not only current top-level EV models, but also by releasing entry-level models. As for the social factors, there are the environmental issues that arise from the customers. Customers are keener on the effects of consumption on the environment, which could be a driver as well. COVID-19 also has a relation with environmental issues, and while economic factors may have also affected the sales, COVID-19 has decreased the sales of conventional cars during the pandemic. And conventional cars' market share is expected to decrease more in the future. However, there are still safety issues related with EV cars such as autopilot system errors, explosion of vehicles, hardware problems, and so on, which is still a barrier that should be overcome in order for the growth of EV. Lastly, for the technological factor, the third-generation EV, which enables longer driving per charge, will drastically increase the growth of EV since the efficiency of EV will finally be comparable with that of conventional vehicles. Also, the commercial EVs, such as pickup and trailer trucks, are expected to be released more and more in the near future, which will expand the pool of the EV market consumption. So that was the introduction of EV market, and we will continue with evaluating the two most competitive EV companies, Tesla and NIO. Taegyu will continue by explaining Tesla right up next.
Hi, this is Taegyu, and I'm gonna explain about Tesla. Before we start, there could be timing issues. In real time, the stock price is $734. I put Brief information to the table. As you can see, the stock price of Tesla is $713. Estimated average target price is $644, which is 10% lower. The median target price is $733, which is a little bit higher. The market cap is $685 billion. Major stockholder, of course, Elon Musk is the first, followed by Vanguard Group and BlackRock. Advantage and strengths. First is logistics. Logistics is the main area of the autonomous driving market to intervene. Globally, it is estimated $6.6 to $8.4 trillion and $1.5 to $2.2 trillion in US. As the development of e-commerce, the market is also expanding. However, lack of drivers, limitation on cross-country is severe. The number of truck drivers in 2020 decreased by 60,000 compared to 2018, and 180,000 drivers are expected to be short by 2026. In logistics cost, the driver's cost occupies 1/3. Tesla is expected to have an overwhelming advantage in terms of cost competitiveness by introducing gigapress facilities. Tesla is planning to complete Level 4 autonomous driving by combining Hardware 4.0, a computational chip, with the Dojo system, an AI learning program. At the end of 2021, Walmart actively pre-ordered Tesla's semi-trucks. Second is regulation. Regulations are often an obstacle to company. However, regulation on environment, especially on traditional vehicle operated with internal combustion engine, is a favorable factor to EV companies. Although there are differences in timing, it is expected that internal combustion engine will be expired from the market by 2030 to 2040. The last one is a supercharger. One of the biggest problems of EV companies is battery. Not only the raw efficiency of a battery itself, but also lack of chargers are problems to be solved. Tesla has over 23,277 superchargers in over 2,564 stations worldwide. Not only is it convenient, but it also saves time. This is a huge obstacle for competitors. Next topic is weakness of Tesla. It is no exaggeration to say that Tesla is Elon Musk's private company. The majority of growth of Tesla is thanks to him. However, it is also true that most of the issues related to Tesla are due to him. A short tweet affects hugely on stock price, that Tesla stock price is too high. After this tweet, shares decreased by 11%. Furthermore, currently, even cryptocurrencies including Bitcoin and Dogecoin are highly affected by his tweet. Elon Musk's tweet about Dogecoin. After this tweet, the price is hugely increased. However, Dogecoin now halved 520 to 260 only in 2 days. And threat. Global car companies Volkswagen, Hyundai, and GM have entered the EV market. After the Dieselgate in October 2015, Volkswagen put a growth lock on converting electric vehicles. Volkswagen invested 20 billion euro in EV. It is planning to produce Level 4 autonomous driving until 2026. Volkswagen targets to release 27 models from 4 brands under the Volkswagen Group by the end of 2022. GM released Bolt EUV in August 2021 and going to introduce other 30 models, including Cadillac, under 2025. It's planning to invest $27 billion into EV sector by 2025. GM is developing Level 4 autonomous driving called Ultra Cruise against Tesla's FSD. In the meantime, the market share of Tesla dropped by 16 percentage points in US and 18 percentage points in Europe.
As Tesla being the global leader of EV market, when we talk about Chinese EV market, we also want to mention NIO, the Chinese EV startup founded in 2017. NIO's market cap now stands at $67 billion US. The competition in Chinese EV market has been fierce, where Tesla has gained a lead with its strong global image and solid software features since opening its Shanghai Gigafactory in 2019. NIO is certainly growing fast with revenue poised to be $5 billion in 2021 and deliveries growing fast. But is NIO worthy of a $70 billion valuation? NIO appears to be innovating in 2 key areas, the battery swap program and self-driving software. NIO has invented a way to boost its cars from empty to 100% charged in under 10 minutes using swappable batteries. The service is under a subscription that doesn't cost much, which also means customers has access to the latest battery tech. NIO also offers fast charging like Tesla, but swappable batteries makes more sense because in East Asia, not everyone has a garage to charge overnight. Tesla dropped this battery swap technology back in 2013 because it is much more expensive to set up than a charging station. And this is where Chinese government comes into play, which we will discuss in a moment. NIO vehicle owners get a complete experience with the battery swap service, and that places NIO as a premium brand in the market. Earlier this year, NIO introduced the ET7 luxury sedan that will be available in 2022. The sedan has impressive features including an autonomous driving sensor and digital entrance system. The hardware is likely to be available to most other automakers, but what really gives NIO an edge in self-driving is the quality of software and the availability of vast amounts of data to improve algorithms. China is both the largest manufacturer and the buyer of electric vehicles in the world, accounting for over 50% manufacturing of global EV shipments. With the Chinese government being supportive of the transition to EV, China also set a target that 25% of car sales by 2025 must be new energy vehicles that are not purely gasoline-driven. Canalys forecasts 1.9 million EVs will be sold in China in 2021, growth of 51% and a 9% share of all cars sold in China. Battery swapping is getting much attention because for the first time, the technology was mentioned in China's annual policy blueprint. The government will accelerate the expansion of battery swap stations and offer subsidy at the same time, which seems to help NIO. Government policy will determine how EV industry in China develops, and clearly China is going full swing in adapting vehicles into electric-powered alternatives. Another interesting fact I'd like to share about China is that if you want to buy a car plate in Shanghai or Beijing, you need to draw lots or bid for it. The restrictions aim to address traffic congestions and pollution. The odds of getting a Beijing car plate, for instance, is about 1 out of 800, like the lottery. And the average bidding price for a Shanghai car plate was $34,000 in 2020. So most people need to wait for over years to get a car plate in Shanghai or Beijing. Also, cars with other city plates are not allowed in Beijing or Shanghai during the daytime. However, to promote this shift towards EVs, a significant proportion of these plates annually are reserved for NEVs for free. In conclusion, while NIO is certainly growing fast, building a brand that is becoming synonymous with luxury Chinese EVs, its valuation looks rich as we don't see a sustainable competitive advantage yet. The subsidy policy signals many other Chinese automakers to adopt the same swap battery technology too. If we look at the price-sales ratio, NIO now trades at about 18.6 consensus 2021 revenues, which means that it is valued similarly to pricey Tesla, whose strong software and self-driving capabilities partly justify its valuation. As written in Citron's report on shorting NIO, Tesla cutting the price of its locally made Model Y could potentially slow down NIO's order book momentum. Whether NIO's stock price goes up in the long term depends on their sales growth and their independent R&D abilities. So all in all, the government support and subsidies have fueled the booming development of EV in China, so to speak. Put competition aside, the favorable regulation, deeper knowledge of the local markets, and unique innovations targeted at Chinese consumers have made Chinese EV stocks, such as NIO, look like relatively good bets at current levels.
Hello, I'm Christina and I'm giving some insights about investing opportunities regarding the supply chain and EV ETF related topics. There are several ways to play the EV market. The first one, the traditional way, by buying stocks in automobile companies. The second, by investing into supply chain, including battery suppliers. Or the third option, you can invest in metals that are used in batteries. So, what are ETFs? ETF stands for Exchange Traded Funds, which are a good way to diversify investments within the EV sector. It is a type of security that trades an index, sector, commodity, or other assets which can be purchased or sold on stocks exchanges like normal stocks. There are several ETFs that are related to EVs and their supply chain. In May 2020, there have been around 7,100 ETFs trading globally. Which EV-related ETFs might be worth to be considered? EV ETFs can be divided into two groups. The first one, EVs and EV supply chain, and the second one, EVs and AVs and some supply chain. A side note, none of the 7 EV-related ETFs that are going to be mentioned are 100% focused on single EVs, because many of them are also focused on AVs. Let's start with the examples for the first group. The first example is Global X Autonomous and Electric Vehicles ETF. They seek to invest in companies involved in the development of autonomous vehicle technology, EVs, and EV components and materials. The second example is KraneShares Electric Vehicles and Future Mobility Index ETF. They are designed to track the performance of companies engaged in the production of EVs and their components or engaged in other initiatives that may change the future of mobility. Another example is SPDR, S&P Kensho Smart Mobility ETF. They are focused mostly on autonomous and EV technology, commercial drones, and advanced transportation systems. Another example is iShares Self-Driving EV and Tech ETF. They are focused on EV self-driving and the technology behind it. They seek to track the investment results of an index composed of developed and emerging market companies that may benefit from growth and innovation in around EVs, battery technologies, and autonomous driving technologies. The last example for this group is Clean Edge Green Energy Index Fund. They invest in a variety of clean energy technologies, including electric vehicles and solar energy. Some of its top holdings are NIO, Tesla, and Plug Power. The second group has two examples. The first one is Global X Lithium and Battery Tech ETF. They are mainly focused on EVs and the EV supply chain. They have a strong focus on battery manufacturers and some lithium miners. The second example is Amplify Lithium and Battery Technology ETF. They are focused on battery storage solutions, battery metals and materials, and EVs.
As they said, the EV and AV markets can be used as a great investment tool. The advantage of the EV markets includes the various EFTs of AV markets and their supply chains, and also EFTs of EV markets and their supply chains. And in these days, they have great advantage of EVs and AVs markets because they are now growing significantly by the government's eco-friendly policies and some of the leading companies. But EVs on the other hand, it is hard to say that electronic cars exist in our society, and it is still questionable that whether the electronic cars can able to dominate the automobile market, because other than a Tesla, there's no company can call EV company from consumers, and number of the charging stations are very limited, and EV charging times is 10 to 30 times more longer than refueling times for the regular cars. So the questions are, will the government be able to secure 10 times more charging stations than gas station now? Once people switch to EV cars, the company will recoup the astronomical cost of EVs and electronic charging stations that companies have invested in. And also they will make a profit of it. So are we ready to pay for that? And for the last, will the cost of electricity, which will become the earth monopoly resource, that can able to form a stable price than when the gasoline cars were present? So, do you think the investment in EVs and AV markets will be successful? I wonder how the audience think about this issue. Anyway, this is the end of the today's news, and thank you for your attention.